Just when you thought the Lentor precinct couldn't possibly cram in another development, the curtain is pulled back on plot number 7. Welcome to Lentor Gardens Residences, the 7th consecutive private residential project to hit this newly minted private enclave since 2022. And now if you listen to the standard retail property hype, you'll hear the exact same script. Demand is robust, past projects are virtually sold out, and you need to buy into the next new launch before prices jump. But let's start to ask a completely different set of questions. Is this going to be a late entry trap where you're buying in at the absolute peak of local supply concentration? Or is this a highly calculated value play where a developer's unique bidding strategy has handed you a built-in safety net? If you are planning to purchase this development in the upcoming launch, watch this video first to understand the underlying concerns of this estate. Today, we are running a breakdown on Lentor Gardens Residences. We are going to break down the locality, the land cost math, look at what's really happening in Lentor today, and find out if this 7th project is a safe haven or just one in many in an over-concentrated region. And to understand Lentor Gardens Residences, you first have to understand the sheer scale of the Lentor estate. This entire precinct is a hyper-focused 30 hectares township master planned by the government to pump over 4,000 private units in a tight 500 meter radius. And to truly understand what we are dealing with here, we have to zoom out and look at the sheer number of units hitting this district. What was once a quiet, untouched forest patch in District 26 is now a hyper-dense 30-hectare township. If you are a buyer or an investor, you are going to be buying into a massive overlapping multi-stage completion pipeline over here. Look at how this wave is scheduled to hit in the open market. Wave 1, which is 2026 to 2027, we have Lentor Modern that kicks off as the commercial anchor with 605 units. And right on its heels are Lentor Hills Residences with 598 units and Lentoria injecting another 267 units. Over 1,400 units will be handed over within these 2 years. And wave number 2, which is 2028 to 2029, this is the mid-phase supply. We have Hillock Green coming in 2028 with 474 units, followed by Lentor Mansion bringing in another 533 units, and Lentor Central Residences adding another 477 units. And again, adding another over 1,400 more units in these 2 years. And the final wave, which is wave 3 from 2029 to 2030, this brings us directly to our current plot, Lentor Gardens Residences, injecting 499 units into the mix, with an expected TOP around late 2029 to 2030. And the final plot, which is closing the entire estate layout, will be the final 8th plot at Lentor Central, adding roughly another 560 units by 2030. Over 1,000 units will be in this final wave. But while there are so many plots, let's take a look at how the land bidding tracked across a timeline. It first started in 2021 with Lentor Modern at 1,204 PSF PPR. I'm assuming it's more expensive because it was a mixed development alongside pre-harmonization prices. And then as interest rates stayed higher longer than expected and localized supply panic started to set in during the 2023 and 2024 period, development sentiment tanked. And also coupled with the fact that harmonization was introduced during this period and it was a fairly newish concept, developers were a bit more skeptical. And so we saw the next few projects not getting bidded on aggressively, unlike the initial ones. And this situation finally allowed Kingsford Group to quietly step into the room and sweep up the 7th plot, Lentor Gardens Residences, and also for a record low of just 920 PSF PPR. This could potentially have been a moment when Guaco Land was taking on too many land sales and couldn't afford to step in, or perhaps they realized that the plot ratio to land size doesn't really make sense from an investor or a developer point of view. But the moment the market realized the earlier inventory was clearing out, developers' confidence came back, sending the final 8 plot at Lentor Central skyrocketing to a record-shattering peak of 1,278 PSF PPR against 4 other bidders. And the land cost discrepancy is massive. Kingsford secured this sprawling 222,000 square feet plot with a safety net over 350 PSF lower than the latest plot right down the street. And that raw math is your initial entry shield. Or is it really? We'll get back to this shortly. Now let's look at Lentor Gardens Residences itself. When you analyze how this development is physically spacing out all its 499 units across this massive 222,000 square foot plot, you realize that the site plan here looks completely different from its neighbors. Because of the strict 2.1 plot ratio, the buildings are restricted to just 3 16-story mid-rise towers and a single 8-story low-rise block. By keeping the towers low and spacing them wide apart horizontally, the architect freed up an unprecedented central landscape footprint. They managed to weave Lentor's longest continuous water feature right down the middle, featuring a 50-meter lap pool combined with multiple other team pools to create a genuinely stunning central body of water. And without a doubt, this is the most distinctive physical asset of the development. Uniquely, Lentor Gardens Residences is also one of the few developments there that will feature 0 one-bedroom units. Holding a majority mix of 2-bedroom unit variants, it also integrates 3 exclusive terrace houses for sale, which together with the low-rise block creates a lower density corner in the estate and also strategically opens up an extra premium front for unblocked views for certain units in this block. While the expansive landscape features make it look like pure own-stay family-oriented development, take note that the number of 2-bedroom units here makes up for almost 50% of the entire development. In a market where new launch prices everywhere are high, this high concentration might incite a wave of short-term 2-bedroom investors to pile in. Now, beyond the cheap land costs, Plot 7 possesses distinct structural advantage that makes it look far more comfortable and breathable compared to the rest of the Lentor district. Number 1, in real estate, plot ratio dictates how intensively a developer can build up. While the rest of the estates were given more than 2.1, and even Lentor Modern with a 3.5 plot ratio could pack higher story buildings and more densely populated developments, Lentor Gardens Residences is capped at a 2.1 plot ratio. Because the developer physically cannot build infinitely high and they have one of the biggest land plots here, which means that this project has the highest land to unit ratio in the entire area. They traded vertical congestion for lower floor ground luxury, leaving enough breathing room to clear a massive space for this water feature in the middle. And number 2, unlike recent launches which are bound by rigid prefab regulations, this project features a non-PPVC structural layout for own-stay upgrader families. This is a massive green flag. It means that your internal walls are completely hackable, allowing you to seamlessly knock down rooms and customize your space without structural limits. And number 3, because Lentor Residences will TOP last amongst the land plots that have already launched, owners of Lentor Gardens Residences will be able to enjoy the build-up version of Lentor almost immediately compared to what the Lentor modern people are facing right now. You won't have to deal with an entire estate under construction, but rather a peaceful, serene environment like what was advertised at the point of sale. But let's step away from the glossy brochure and look at the weaknesses now. What are the hard trade-offs you're making here? Number 1, while we don't have mass market condos that have only 4 units to share a lift lobby anymore, 9 units sharing a lift lobby seems like the standard benchmark today. However, look closely at Block 74, which is heavily dominated by 2-bedroom configuration units. It features a brutal 12 units sharing a single lift lobby. This will absolutely not feel like the spatial, lower density development that people think they are buying into. If you're eyeing this launch, you will need to watch out for Block 74, where almost 40% of the units in this development will be located at. Number 2, Lentor Modern sits directly on top of a train station. Lentor Gardens Residences, however, is tucked at the back of the enclave. In fact, This is one of the furthest development from the MRT in this location. So while you gain tranquility, you are trading away immediate convenience. It requires you a potential 500-meter walk to reach the MRT gates. And number 3, island-wide, we are not oversupplied. But micro markets are a completely different story. Between 2026 and 2030, a massive wave of over 4,000 brand new private condo units across all these adjacent plots will cross their completion timelines simultaneously. If you enter this precinct thinking you can execute a fast capital flip, the sheer volume of competing with nearby inventory will choke your short-term exit. Plan for a longer hold if you believe in the final version of what Lentor Estate could be. And number 4, this is the most critical detail we need to address. Even though the land price is significantly cheaper, the developer is absolutely not passing those land cost savings to you. The indicative launch price is setting a brand new high for the area at 2,350 PSF. And this is not my estimate, this is given by the developers themselves. While the prices may still look attractive compared to all the other new launches that are in other prime city fringe locations, look at the micro data. Despite sitting on the cheapest land in the estate, you are buying into one of the highest retail prices in the entire neighborhood. Even if we compare harmonized project launches at similar land prices and their break-even price and even the launch prices, Lentor Gardens Residences seem to be starting from a really high point. It is clear that the developer knows that they can command a premium due to 2 factors. The first factor, Lentor modern sub-sales are already clearing above 2.5k PSF. And the second, the latest land bid closed at a high land cost, translating to a projected break-even price of 2,193 PSF for the final plot down the street. Kingsford seems like they are cornering the market and is testing to see if consumers will look past their immense profit margins and still buy in at the top of the local launch price point. As a buyer, be cautious. Keep in mind that the average PSF of Lentor Modern in today's pricing, which is an integrated flagship development sitting directly on top of the MRT and a mall, is currently commanding an average resale PSF of below $2,400. Be sensitive to the PSF that you are buying into. And now let's take a look at real-world data. We have a TOP project here already, Lentor Modern, the Golden Child integrated development that was 100% sold at launch, and a doorstep MRT. Despite having 38 recorded sub-sale transactions, which looks pretty decent honestly for a project that TOP'd approximately a year ago, there are currently 178 units listed for sale on Property Guru and 62 units listed for rental at the point of this recording. Out of a 605 development, nearly 40% are actively fighting for an exit or a tenant right now. And this is just development number 1 out of the 8 upcoming developments in these next 4 years. And in the crucial plot twist, almost half of the listings available on Property Guru are 3-bedroom unit types. In fact, there are more 3 bedrooms for sale compared to the 2-bedroom unit types. So what's happening here? When you look at the breakdown of unit types, it shows us that Lentor Modern has built 248 3-bedroom units, making up a massive 41% chunk of the total units. And it seems like investors have been aggressively piling into the 3-bedroom unit types under the assumption that it is perhaps a safer bet than the smaller 1 or 2 bedroom units. They assume that 3-bedroom unit types are insulated from the resale investor competition because 3-bedroom units are usually catered to organic own-stay upgrade families, making them a rarer breed on a resale market. But look at the aggregate data for the entire Lentor estate. Across all launch plots, 3-bedroom unit types are the second most common configuration, totaling to 1,134 units, forming close to 33% of the entire area's inventory. Statistically, that's for every 3 private properties built in Lentor, one of them is a 3-bedroom unit. This data confirms our structural mismatch theory that there's a massive wave of speculative paper profit flippers that actually bought family-sized 3-bedroom units entirely hoping for a fast capital flip or a high-paying corporate tenant pool. And instead, they are now hitting a brick wall. Local upgrading families don't want to buy into the premium TOP effect when the estate lacks an immediate pull factor and remains a construction zone, while corporate tenants with a 5 to 6k budget would rather keep their capital closer to the city. So make sure that you don't fall for the 3-bedroom commodity trap here. If you buy in with a short-sighted investor mindset, you will get caught in the supply crossfire before the demand can actually slowly absorb the inventory down the road. And now we must first understand that the estate is not fully developed yet. In fact, it's an under construction estate at the moment. People who are buying in now are like the early adopters and believers of the final version of Lentor. And the real-time data has shown, like we saw in the data previously, that Lentor itself currently doesn't have enough of a pull factor to encourage people to live their own home districts yet. But what about 5 to 7 years down the road, when Lentor has possibly fully developed? Is there still an exit plan? We will have to look outside the boundaries of the Lentor cluster itself and look at where the wave of organic demand is coming from. Lentor Gardens Residences sit at the epicenter of two local demographic forces. Number one, directly bordering this plot are thousands of sprawling multi-million-dollar landed homes. Over the next decade, as multi-millionaire baby boomers living inside these massive properties continue to age, they face a very common structural problem. Their children are moving out, and maintaining a 3-story freehold landed house is becoming physically exhausting. They would want to downsize, but these cash-rich seniors would probably refuse to move into a higher density area where they have to queue in a crowded lift lobby or maybe be right next to a noisy transit mall. Because Lentor Gardens Residences is built with a low 2.1 plot ratio, its low rise footprint and exclusive strata landed houses would probably act as the perfect low density neighborhood that might attract this group of people. And number two, at the exact same time, look at the public housing demographics framing this estate. You are surrounded by 3 massive mature HDB towns, Ang Mo Kio, Bishan and Yishun. These enclaves are packed with affluent second-generation families living in billion-dollar public flats. Well, potentially, maybe aside from Yishun, they would want to upgrade to a private property to secure a wealth anchor for their children, perhaps, but they possess an intense geographic loyalty. Let's take for an example, when a family living in a $1 million flat in Ang Mo Kio looks to upgrade, Lentor becomes the natural extension of their home ground due to the severe lack of private resale in the Ang Mo Kio area. So, end of the day, should you buy Lentor Gardens Residences? And to give you a definitive answer, you should not buy if you are a short-term speculative flipper. As we saw from the Lentor modern data, the sub-sale and early exit market in this precinct is foreshadowed to be heavily bottlenecked. If your game plan is to flip this property within 3 to 5 years, the concurrent wave of 4,000 competing units will choke your exit. And also, if you're a pure rental yield investor, tenants are convenience driven. They will want the doorstep MRT, or if not, as close to the MRT and the mall. Being the furthest from the MRT, the distance means you will face intense rental undercutting against those landlords who have unit in a development that is closer to the MRT station. And also, if you are out there to get a good deal, do not buy into the myth that you're getting a discount just because Kingsford bought the land cheap. At an indicative average launch of 2,350 PSF, you are buying top of the market retail prices, while the developer pockets that cheap $920 PSF land savings. And now for the next group, you should buy it if you are a long-term own stay family upgrader. If you are migrating from a $1 million flat in Ang Mo Kio or Bishan, this layout is unmatched. The non-PPVC hackable structures allows you to customize your dream layout, and you securely anchor your family within Singapore's latest converted private enclave. And of course, if you are a landed downgrader, if you are an aging homeowner cashing out of a high-maintenance legacy condo in Upper Thomson or teacher estate, this is your perfect luxury escape. The 2.1 plot ratio means you preserve the low-density, low-rise, quiet, green lifestyle you love without ever having to move into a chaotic district. And the most important for all buyers, if you have at least a 7 to 10 year holding horizon, Because you will be TOPing late in the precinct cycle, you bypass years of disruptive estate construction. If you still have the holding power to wait out the initial TOP supply, you will inherit a fully mature, pristine, hyper-breedable township once the market absorbs the inventory. So stop panicking over broad headlines and stop running blindly into every new launch out of FOMO. As we have gone through in detail for the Lentor estate, with real-life examples of what Lentor Modern is facing, be very aware of what you're stepping into when you're buying into this district. And more importantly, as we always say, do not settle for a generic unit type with no unique selling points in a sea of new launch units in this area. If you want to stress test your upgrading timeline or see how your portfolio stacks up in the upcoming Lentor collection waves, drop me a DM at 9697-1000 for a private data-driven strategy session. And if you like videos like this, consider subscribing to the channel. I'm ASAP and I will see you in the next video.